Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite significant level of monthly demand and support. In fact, from here, all these previous rejections to the upside were created. At the moment, we have a market which is testing the exact same zone from which there is definitely the possibility to see a potential rejection to the upside away from this level. So on the monthly, everything looks very bullish. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, what we can notice is that at the moment the market is testing quite strong weekly demand and support. From here, all this previous rejection to the upside was created. The market then broke below the support and now it broke back above. Now, in a situation like this where you have a fake breakout below a strong structured level, that is essentially the start of the creation of an inverted head and shoulders pattern. In fact, when you have an inverted head and shoulders, you essentially have a move to the downside, then a support level is created, then you have a fake breakout below that support level, the market breaks back above, then you have a correction and the rejection to the upside, essentially creating the right shoulder here, the head here, and the left shoulder here. Now, in a situation like this, we are essentially at the area in which we would expect the market to create a potential right shoulder and get rejected to the upside. We can also notice that, generally speaking, we have a very clear pattern here. We have a strong impulse followed by a correction. Now, when you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have both the 50% and 0.618 Fibonacci retracements lining up exactly in this area, creating confluence of support inside of this zone that we could expect this market to reject to the upside. So also here on the weekly, everything looks very bullish. Now, dropping down on the daily time frame, what do we see? Well, from a daily standpoint, we have to measure this correction after this impulse as we already did on the weekly time frame. So if we do that again and we take our Fibonacci from the low to the high, in this case of the daily impulse, what we can see is that we have the 50% and 0.618 Fibonacci retracements lining up exactly at this level. And if we extend this level to the left, as I have just done, what we can see is that this level was already in the past a quite strong support zone, acting as support in multiple occasions, creating all these rejections to the upside. So we have a very strong level of previous support, which now that the market has broken it to the upside once again and is currently retesting it, is actually acting as confluence of support because we have both the structure support and the 50% and 0.618 Fibonacci retracements. And inside of a confluence of support area, you would expect to see some institutional longing. And if we're actually getting institutional longing inside of this area, that would at that point further increase the probabilities of a potential rejection to the upside away from the level, as we have already identified when looking at the technical aspect for this market. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the NZD, what we can see is that with the last reports, net positions have actually been increased. We went from having minus 21.2k net positions all the way up to having minus 12.8k net positions. So essentially net positions got doubled to the bullish side. We can see how longs got increased from an institutional perspective from 7.6k all the way up to 14.3k, and shorts got decreased from the high here at 30.9k down to the current 27.1k short positioning. So institutions have been moving to the bullish side of this market. And inside of this confluence of support, we could expect more institutional longing, at that point further increasing the probabilities of a potential move higher. So how we could be approaching this potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, these are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what we could be doing potentially is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find both linked in description and in my bio. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll lower past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.